Welcome to FT Markets. Sweden has recently taken the unusual step of cutting its interest rate into negative territory. Here at the FT's very first Debt Capital Markets Conference is Thomas Olofsson of the Swedish National Debt Office to discuss this with me. Thomas, thank you very much for joining us today.
Thank you.
So can you start by explaining why Sweden has taken this step?
The Swedish Monetary Policy Authority is, of course, like ECB, worried that we will be stuck in a deflationary situation and want to increase inflation to its target of 2%.
Low inflation is something that has been haunting the Eurozone and its neighbours for a while now. Do you think that the steps that have been taken are enough, or is this the beginning?
The Central Bank of Sweden has indicated that they are prepared to take further steps if needed, even though they have stated that perhaps the situation has bottomed out. So we will see, but actually what they are saying is that they are prepared to do more if it's needed.
And how do you regard, and how does Sweden regard, what the ECB has announced in terms of its QE program that's due to start in March?
Yeah, and of course that program to buy government bonds in the Eurozone is quite large, and will have the effect of lowering yields and make sure that yields stay low. And as the Swedish government bonds are traded at least usually around the levels that Germany does, or slightly above or slightly below, this of course affects yields of government bonds too. But one relevant question is, of course, if ECB is going to buy Eurozone bonds, who is going to sell? And what are they going to buy instead? So one possibility is, of course, that you have a spillover effect, that investor demand for Swedish government bonds would increase too.
Have you seen that already, do you think?
It's difficult to say, but we know that we have a steady inflow of foreign investors buying into Swedish government bonds.
And have you seen the inflow of foreign investors versus domestic change in the recent years?
A couple of years ago, at the peak of the Eurozone crisis, we saw heavy inflow, not only to Sweden, but to other so-called safe haven issuers. But since then, measures has been taken in the Eurozone to stabilize the situation. So the inflow has not continued, but it has stayed. So when investors came back to peripheral countries and buying Spanish bonds and other issuers bonds in the Eurozone, they didn't leave Sweden. So what we saw was an inflow of foreign investors. So now around 50% of government bonds is owned by foreign investors, and that has been fairly stable.
And Sweden's been issuing government debt at extremely low yields recently. Do you think they can go much further?
If you asked me 1 year or 2 years ago, perhaps I would say perhaps somewhat further, but not much perhaps. But that now we have even a situation in which yields are even substantially lower. So I have stopped guessing on what level we should reach any bottom.
How significant is this point in history in bond markets, with yields across in the Eurozone and its neighbours going into negative territory?
Well, if we read history books in the future, I think together with the crisis during the 30s, this crisis will be standing out, because it's quite unique and of course quite serious. Because we don't want to get stuck into a deflationary situation, any situation with very high unemployment rates. So it's definitely very significant. And I think also negative yields. I'm not that old, but I have never experienced such a situation before.
And what the measures that Sweden is taking are quite different to some of its Nordic neighbours. Can you explain some of the differences?
Well, some investors perhaps think about the Nordic region as one region, but remember that Finland is part of the Eurozone, Denmark have a fixed exchange rate, and Norway is outside the Euro and do have their oil. Sweden have a very diversified industry and differs in a lot of ways, but have a floating exchange rate. And this means, of course, that it's quite different in the way it functions. But what is common for the Nordic countries is perhaps that all the countries do have pretty strong government finances.
Thomas Olofsson, thank you very much.
Thank you.